Happy Friday, Eric Bible with the Bible team at Neil Home Loans. Another good week for mortgage interest rates. This morning, I'm happy to report that the 30-year fix is starting out at 7.05%. There are some mild turbulence given the recent BLS jobs report, which I'll get into, but nonetheless, rates are heading down. And this leads into next week's all-important Fed decision, the last time the Fed will meet for 2023, and the market is eagerly awaiting what their response will be. But first, let's unpack jobs. This week was a pivotal week in the labor market and really a report that the Fed was acutely paying attention to as it compounds into their mandate around price stability, inflation, and maximum employment. So this morning we received the Bureau of Labor and Statistics jobs report. Market was forecasting 180,000 new jobs created. We saw 199. And on top of that, unemployment was supposed to maintain at 3.9%. Instead, we saw it moderate, decline down to 3.7. So the question was, well, we've seen cracks through the employment sector with continuing claims. Earlier this week, we received ADP, which is private payroll new creations for the month of November, and we saw a miss there. So the question leading into this report was BLS going to mirror the information received over the preceding weeks? And it looked like that was not the case. But unpacking that report, there's a number of mentions around employees returning from strike. And now keep in mind the 199, where yes, it was a beat against us, it is still below the 12-month trend of 240,000 new jobs created. So the argument is still there for the Fed to heed the notice that the labor market is in fact slowing, which ultimately, coupled with inflation coming down, the Fed has been very vocal in that they want to see the labor force retract, as that is ultimately deflationary. So that leads into next week. Next week, we get the final meeting of the Federal Reserve for 2023. And now the market is still fully anticipating the Fed will not hike rates. As of this morning, 90%, 97% certain that rates will remain unchanged. The question really becomes, is there's been this growing speculation, whatever we want to call it, that the Fed is going to start cutting rates in 2024. Now, the Fed at the podium, specifically Jerome Powell, has not been vocal around when hikes or declines, I should say, rate cuts will take place. The market wants to have some more direction. And I believe with next week's meeting, we get inflation data for the month of November, the day before they meet on Tuesday. There is a growing sentiment that we will get some more clarity from the Federal Reserve, which ultimately will be good for mortgage rates. We've seen an incredible rally over the last 45 days, rates dropping an entire percent and in some instances more. The question becomes, will this rally be maintained, and can we expect them to go lower? And here it's all going to hinge on what Jerome Powell and the Federal Reserve, their comments to the market. So something we will be very closely watching. And again, as that information becomes available, we will undoubtedly share. That brings me to our November, or should say December housing survey. This is a national survey, incredibly useful information. I've included the link in the body of the email attached. I encourage you all to take 15 to 30 seconds to complete it, and the information I'll be sharing next week. Now, the message we need to continue to drive to our consumers, an important message. Rates have moderated, and it does appear that rates will come down for the duration of 2024. Home prices have not. Home prices have actually continued to increase, albeit not at the levels we've seen in years past, but still nonetheless, home values have continued to rise, and that's on the back of multi-decade high interest rates. My concern, and the message we need to continue to drive to our consumers, if you're waiting for rates to come down, take advantage of it now, because there's hundreds, if not thousands, of individuals in the county and throughout the nation waiting for the same thing. And we know inventory is incredibly low. My biggest concern is first-time home buyers, especially. Their cost of waiting will potentially price them out of the market forever. Take advantage of the opportunity that presents itself now. Close out the year strong. And as always, if you need support in communicating this message, we're here to assist. Make it a great day. Make it a great weekend. And we'll talk soon. Thanks again.